Hello and welcome to Crypto Weeklies. In this video, we analyze the impact of recent narratives on Bitcoin's price. None of the content is financial advice. So this is the narrative word cloud available on cryptoweeklies.com on the bottom of your screen, link on the bottom of your screen under this section. All charts available for free, no signups required. So let's get started. Over the last 7 days, the most popular narrative apart from Bitcoin is the tariff narrative. There have been a lot of sell-off over the course of since last Thursday, basically, where the crypto market has also participated in the cool-off from the tariff-related narrative. Although there are several bullish sentiments in the market, most of the investors are feeling pain of tariff and tariffs. Again, one single largest narrative. From the narrative word cloud, again shorts related narrative, and also altcoin and their narrative are diminishing with respect to Bitcoin. But let's focus on the Bitcoin's price action over the this is weekly price action of BTC, and it's coming up to a major area of support. Again, this is coming close to the 2024 yearly high. At one point the price over the last week or so went as low as for this candle. Again, if you see over here at around 75k, now the price has shot back to 77k. If it were to go and have a shorter term rally in this week or in the coming weeks, the area of resistance is to look for the trailing resistance coming in at around right now at around 86k, which is the 21 week exponential moving average. Also the trend line, again, if it were to break right now or over the course of this week, the break or the support for this trend line is coming in at around 74k, right where the 2024 yearly high for Bitcoin was. Let's see if the price action breaks to the upside or to the downside. The next area of resistance is all the way at around 93k, which is the 20 week simple moving average. Let's analyze the price of BTC in that lens, using that lens. But before we do that, we'll briefly look at some of the last 24 hours worth of news, again available on cryptoweeklies.com, summarized by our machine learning based model. Looks at the news in the crypto TLDR section and analyzes whether the narratives are bullish, bearish, or neutral. Bullish is green in color, neutral is yellow, and red is bearish. Again, over the last 24 hours, lot of discussions related Bitcoin and its collapse, and disaster for Bitcoin and Ether, Black Monday, market crash incoming. These kind of bearish narratives are popping up. Again, another area of confluence of cryptos, Black Monday, Plan B related news for Bitcoin, FTX like collapse being predicted by some analysts, weekly recap. Again, all of this, again, since the week of January 21st began, the drawdown in the crypto market has been worth noting. If we take a look at the price range and the drop in percentage from that 20 January price till today, it's Bitcoin is down by about 32% from that point in time. If we look at the ROI for Bitcoin in this year, again this 2025, this is available under ROI section for BTC yearly ROI. Let's take a look at 2025. Again, Jan 6 was at around positive 8%. Jan 21st was positive 12%. From that point, from positive 12% to now negative 18%. That's again, if you add those numbers up, it's kind of a 30% drop from that 12% local maxima to now the minima at around 18%. A series of lower lows in terms of year to date ROI for Bitcoin. If we look at Bitcoin from a logarithmic scale and analyze its risk using regression based approach, again you can see over here the price of Bitcoin has taken a lot of beating, but the fair value for BTC, this is the pink line, which is at currently at around $119,000. You can see this also for this week the lows were at around 74.46k for the week which began on April 7th, which is today. If we look at price of BTC from this, using this pink value as a guideline, you can see that often when the price is above the pink line, BTC is in a bull market, and opposite is that If we take an opposite of that would be if whenever the price is below or trending between the towards the lower end of the pink line and slightly above the green line, that's where Bitcoin starts feeling the pinch, that is the bear market pinch. This time around again, Bitcoin did face a severe downturn or in November 2022 as till about January 2023, when the price was below this one standard deviation residual applied to the fair value. Also, the June 2022 bottom at around 30k came close to the regression based valuation. Again, back then this green line did offer a support, and then there was again a counter trend rally, but the next iteration of that rally, after a few areas of support in September, October, eventually that support gave away, and in November the price had a further capitulation. Now in 2025, this is the first tag of this one standard deviation residual to the fair value. That bottom support is coming in at around 73.8k. So if there is a some sort of strength and a rally to let's say to a counter trend rally to close to this again. So if June of 2022 is an indication, again a rally from that eventually does not even engulf the entirety of this bearish candle. So if that is similar to the March 3rd drop, then in the future, again just extrapolating, in the future, if there is a rally, the area of resistance would be at around 94k. Again, quite confluent with that analysis of technicals at around 94k. That's the 20-week moving average coming at this point in time. So that could, if there is a renewed strength in the market, a temporary renewed strength in the market, the area to watch for is that 94k. And definitely, if there is further leg room in the bull market, the area to watch is the fair value coming in at around 120k. If Bitcoin manages to go to that level, again at this point the market is bearish, but again the price setup for Bitcoin, especially starting 2023, has been quite similar. A handful number of weeks where the price goes up and there's a sideways chop, at times a series of higher lows, and then a sideways chop for months, from January to essentially till October, almost 10 months over here. Then again a rally till about March 2024. Eventually again over here also a couple of months of consolidation from October 2023 till January 2024. Then again one rally from January 2024 till March 2024. Essentially from that point till October 2024, almost 7 months of consolidation, and then price incrementing till about December, again 2 months. And from that point in time, from December 2024, essentially, even though there was a slightly higher high in January 2025, the price was in sideways chop, and now it's kind of testing the lows. It has not tested those lows since March of 2023, more than 2 years ago, from this regression based perspective. So let's say if the prices have to hold this line as a support, if they don't, then there could be further downside for Bitcoin. Again, not financial advice. If we look at the simple moving average risk for Bitcoin, again you can look at that from this in terms of these bands from 0 to 1 or 0% to 100% risk. We did go in December as high as about 80% risk. That is in the highest risk band. We barely touched this time around, unlike 2021 rally where there were several weeks spent in that risk band from January till about March of 2021. Again, October November rally, even though it was a higher high in terms of price action, in terms of price with respect to 20-week simple moving average, it was not as elevated as it was back in March to May of 2021. Now Bitcoin faces a severe downturn. Now the risks are at around 9% with respect to the 20-week moving average, again less than 10%, or 0.097 to be very precise. Again, ETH, I would imagine, is even doing worse at this point in time at around 5.7% risk. Both of them are in severe downturn with respect to the simple moving average. Again, a bounce from here would not be too dissimilar to what happened back in July of 2021 when the price had a similar drop. Again, this is price color coded with respect to the 20-week moving average, and the risk levels are identified between 0 and 1. And in increments of 10% or 0.1 increments. The color codes are also identified from the cooler colors to the warmer colors. Now the risk is, as we mentioned, less than 9%. Again, if the hypothesis is to only to DCA BTC whenever the risks are less than, let's say, 10% or 20%, this model does identify how to tune out some of the noise in the market. Again, although there are a series of lows from this point in time, again there was from here there was at least one counter trend rally. Similarly, from here there was at least one lower high in the market. Again, this was a precipitous drop, but from July 2022 low, there was at least August highs of 2022, and then eventually in November 2022 that was the bottom. Again, similar story for here in June, July, August of 2024, and now after several years of price point, again, since July of 2022, this is the first print of less than 10% risk on its SMA for BTC. So we are at a monumental low for BTC per this model. And if the opposite is true, if there is a rally in market and eventually if it resolves to a non-euphoria rally, the area or the risk levels for the SMA to watch for are between this 40%. Again, that's the lower end of the price target for any rally, between 40% or 0.4 to 0.5 risk to 0.5 and 0.6 risk. So this 20% risk increment between 0.4 and 0.6 risk is essentially where most of the rallies eventually either even though they don't quite reach the blow off top level, they at least visit that 0.4 risk. If the prices were to go to that 0.4 risk, that would correspond price of BTC to between 107k to about 114k. So that's the target for Bitcoin if there is a further bullish upside in the market. On the other hand, if the prices were to go back to 94k, that would correspond to as an entry in the forward looking model to at least some risk reward. Till then, it's just a falling knife per the model. The DCA model, which takes into consideration the regression based fair value that we looked at the weekly candles early on. This is price color coded at a daily level with respect to the regression based risk levels. Right now the risk levels are at 30%. So again, although the SMA model says that it's the best time to DCA, per this model it's not. There is further downside for BTC. Again, if we try to tune out some of the noise in the price action and to identify both the bottoms and the tops. Again, if the framework is for Bitcoin, again this is a much widely adopted asset with respect to its peers in the crypto market. Identifying the bottoms at the price where the price is less than 30% risk. This is the first print of less than 30% risk since about the March 2023 lows, essentially towards the end of the last bear market. After from that point to now in the second quarter of the post-halving year, we have witnessed a drop where the price has gone to a risk level at around 30% risk with 76k as the price. If the prices were to go let's say to that 50% risk, which kind of onsets the euphoria phase for any rally for Bitcoin, if that 50 to 60% risk regimen is identified or realized by the price action, the price at that point per this model could be around 189k per this model. Again, right now the prices are nowhere close to that regimen. If on the other hand the prices never visit the fair value until this non-linear fair value goes back down. Again, this is not a linear fair value by any stretch of the imagination. There you can see there are phases where the fair value goes sideways. Also, again, as this is a non-linear model, the fair value could go down with time if the downturn continues for multiple years. Per this model, the maximum bottom for Bitcoin permissible by this regression based estimation is at around 32.7k. If the prices were to go to 0.1 risk, again that is a more realistic scenario, that bottom is coming in at around 64k. The 0.15 risk, we are below the 0.15 risk. The current price is at around 76k for Bitcoin. That means the prices are lower than this 0.15 risk, somewhere between this 0.1 and 0.15 risk. That's where we are operating at this point. So secondary level of support per this model is at all the way at around 64k, which is close to the 2021 high at around 64k, slightly higher than the October-November high of 2021 at around 67k. So that's the zone of interest to look for. The next level to watch, again per this model at 20% risk, is at around 95k, which is confluent with the 20-week simple moving average at this point in time. So looking at the time weighted average price model as well, the risk of Bitcoin accumulation have gone down at around 77%. This late into the bull run, again this model did identify less than around 20% risk back in November 2020, when the price was gearing really close to the 20-week the time weighted average price at around 12k. Now the time weighted average price is at around 21k. So again, Bitcoin has not visited the time weighted average price since as late as about September 2015, almost 10 years back. The prices have been an upswing, have not really tested the 20-week moving the time weighted average price. Let's say a couple of years into the future, the time weighted average price could be at around 30k. Now it's at around 21k. In 2022 they were at around 12k. So that's the current risk level with respect to the time weighted average price. As an estimation of all the models, a way to identify a summary risk reward for Bitcoin at this point in time of the bull run. Again, right now all of the risks reward point to a eventual peak. Again, if the risk were to go to 100% at around 250k, the price right now at around 77k is almost 3.3x away from the estimated bull run peak. Again, that is if all the models trigger at around 100% risk, but a realistic scenario is around 60% of this 255k target. That brings price at around, we go to 60% of 255k, the price of Bitcoin in that environment could top at around 153k. If on the other hand, if the models peak at around 80% risk, the estimated bull run peak for Bitcoin could be at around 204k. And with that, I would like to conclude the video by saying the first levels of support, again at a critical juncture at around 74k. If that breaks, scenario for Bitcoin to watch for. Again, and ETH is doing much worse than Bitcoin at this point in time, again at around 1500k, $1,500, sorry, less than 0.23 Fib level, whereas Bitcoin is from its retracement approach. Again, if you draw retracement based lines on Bitcoin, you would find that Bitcoin is still above the 2021 highs. That means the from the Fibonacci level, the levels are higher than 1 at this point in time. So that is also a key level to watch for the 2021 highs at around 68k. And with that, I would like to conclude the video. Hope you enjoyed the content. If you did, please give us a like and subscribe, and hope to see you again tomorrow. Thank you and have a nice day. Bye bye.